So the ECB is coming up literally very, very soon. Um, in an hour's time, I believe it is. 43 minutes, okay? And we also have US data, countless jobless claims. Sorry, that's my fan going haywire. I need to try to get that fixed. What's going on? Producer price and retail sales. So, really heavy agenda over the next hour or so. And um, I would prefer to just be sitting on my hands and letting it all play out, just taking interest in the um, in the events and see how it all settles. And we're going to have the ECB conference. That's 6:45 my time. That's in about an hour and 15 minutes time from now. So we have to wait for that to conclude as well. And only thereafter, once all the dust is settled, and then we'll be looking towards the Wall Street Open. Um, are we going to be able to take well, trade it? I mean, depending if there are any setups. So people are asking, what's the outcome going to be? Where's the price going to go? How's it going to affect this, that, and the other? And my honest answer is, you just never know. And it's like predicting the weather, but don't be, how did I put it? Don't be surprised if it rains on your picnic. So that's the thing with data. Often, well, you don't know what's already priced in. So a scenario could be that the data comes out potentially bullish for whatever currency is that you're trying to trade, but it goes the other way. And you get a buy the rumor, sell the fact scenario, and vice versa. So trying to trade the news can be tricky. Institutions, big money, often use the news to actually get out of their positions. So they'll use the volatility. So if they've already bought and it shoots higher on the knee jerk, well, they'll use it to get out of their position, and that slams the market back the other way. I hope that makes sense. So, um, you know, so for instance, let's say you get a hawkish outcome out of today's meeting. Let's say the ECB hike rates. I mean, that would be expected to support the euro, and you certainly would see I mean, there's a 90% possibility that, or 99% that the euro would spike, rally. But if you've got institutions that are already in the euro, and we've already started to see um, the euro stabilize, okay, even in an environment that should be bullish for the US dollar. I mean, the US dollar failed to sustain a bid yesterday, didn't it, after uh, the inflation data. So you have to scratch your head and start wondering, well, why would that be? Well, perhaps you've got smart money already anticipating not necessarily a rate hike, but you might have those that are, or a hawkish outcome, and the ECB leaving the door wide open for rate hikes. I mean, you had the Reuters report earlier on suggesting such a thing and prospects of a rate hike. So you might already have this large money in the market. So if the euro were to rally, well, great, they're making money, and they'll be looking to come out of that position and slamming down the euro with putting on plenty of supply that could, you know, move it the other way. So it's not easy trading this news. Other times, you'll buy it and it'll stay high, and you'll think, well, great, this is easy. You just when the news is positive, you buy the currency and it rallies and stays high, and but that's not always the case. So what you're looking for is you're looking to see how the market reacts and whether. So, for instance, if the euro were to rally, inevitably there'll be a pullback. I mean, it's 9 times out of 10 you'll see that. And then it's whether the euro stays bid, whether you see more buying come in to support the euro, and you'll see that on the charts. You'll see a technical structure being made, and that's something that you can lean against, and you can that is your strategy to see that structure set up. So, for instance, let me just try and draw something, um, and let's do it on a. Just imagine we're on the 5 minute chart. Okay, so the ECB rates hike rates, bang, big move up, and that is inevitably met with a pullback. There's profit taking and all sorts going on, and it's a question as to whether it pulls back and builds structure to the downside, and that's something you want to stay clear of because you've got all of that resistance. You've got all of that resistance. So buying low is not going to be your best strategy at that point because it can quite easily come up and then continue lower for whatever reason. So that's what you want to avoid. But what you can partake in is the price shooting up, pulling back, um, and starting to build bullish structure, maybe coiling, and then breaking to the downside and breaking back up, coming back in. Oh, great! Well, this looks promising, and you're buying the continuation for the rest of the day. So that's the way I handle these events. So I just let it all play out, through the news feeds and on the charts, and then if you get a setup, and if that's happening at the low of the day, so let's say we've got the euro doing its thing, and we're coming in towards the um, Wall Street Open, and we're say building structure like this at the low of the day. So New York is opening over here, say up here, the price was up here, and it's doing all of this stuff around the lows of the day. Then well, that's great because then you're buying low in a bullish environment for the euro based on fundamentals, and you've got a bullish setup. I mean, that's not no, that looks like a mess. Um, and you've got a bullish setup at the low of the day. So you've got the high of the day up here. That was done maybe in, um, say, Asia, right? And then the price came down throughout Asia. Um, London was a big sell off as well, consolidation before the event. Then the event happens and it shoots higher, it comes back in, and it starts building structure, support, and then you've got the Wall Street Open coming up, or you're near it, or you're at it. Well, great, you're at the low of the day at that point, and you've got bullish structure to get involved. So you've got the support of the fundamentals and the fact that you're buying at the low of the day, low of the New York session at least, or even, you know, the low of the day or the session, whatever it might be. All right, so I hope that clears up some of the query around trading news. Now, in terms of the expectations, then, so um, we've got a bit of a coin toss with regards to the ECB. Okay, I mean, that's the main focus, I believe. I mean, we do have retail sales, as I said, and some inflation data out the US. I mean, that they could be the main event, depending on the outcome of the ECB. If the ECB is a benign scenario, then the focus will shift dramatically towards the US data. Um, but market pricing has actually surged this week in favor of a rate hike at the ECB. So um, that's the reason why. I mean, the dollar isn't taking off because you've got prospects. Where is the euro on my watch list? Here you go. And I'm sorry about the noise of my fan if that's a disturbance. It's certainly annoying me. Let's see if I can. Anyway, so um, we've seen here that the euro has actually been uh, pretty firm. You know, it's come low but come up and staying up high. So these expectations are that there could be a rate hike. So therefore, if there is not a rate hike, accompanied by dovish or less hawkish commentary and rhetoric through the economic projections that will be given and the statement and so forth, then that euro would be expected to weaken off, and you get a scenario whereby the US dollar, therefore, could take off in its um, daily bullish structure. So you've got an impulse, correction, and prospects of a bullish continuation in the dollar. But on the flip side, as I mentioned in the chat in the group, the euro dollar has this weekly M formation, which is a bullish formation. So you've got all of these weeks of supply. So that inevitably will be corrected at some point. The market will need to rebalance all of this. And the most likely area that the price would go to would be the neckline of that M formation. So a move up into the neckline would be where the euro could be attracted to, right? So back into the 109 area, considering we're already at support. So we've started this week to try and correct some of that move. So maybe today is going to be the catalyst for a continuation up. All right. So it's a very important day today. Um, Now there's a what is it a term, fear of missing out. So on these events, I mean, I'd rather not be drawn in and desperate to catch, you know, and be the first mouse, you know, the early bird and so forth. You know, we've got time. I mean, if this turns out to be bullish today, then great. Then you'd expect tomorrow to get a nice trade to move in on, right? Because we've got not only have we got all of these weeks selling off, we've also got this week as a template. So let me come out of all of this and go to the weekly template. So yesterday was an inside day, so you've got stops below and above to take note of. So maybe we'll get some whipsaw action either side. But you've got this week as a template as well. So we can lean against whatever happens today could be the setup for tomorrow. All right. So I'm going to end this here, um, and I'll do a sort of a follow up later on in the group. I'll do a video ahead of the Wall Street Open, so look out for that. But the live coverage has started now in the Discord. So if you guys want to head over there, and you're going to get more insights from our team over there. All right. So apologies to cut this one short, but um, that's the way it is on days such as this when we've got all this data coming out very, very shortly. All right. So good luck. Hold on to your hats. And like I said, I'll do a video once the dust has settled, and I'll post it in the analysis group, and we'll see if we've got any setups for the Wall Street Open. Okay. May the markets go with you all.